Closing costs are an essential aspect of buying a home, and not understanding them can become an unforeseen disaster for those looking to buy a house. But fear not, I am another evangelista, and on this channel, I teach you all the tips and tricks that you need to succeed in real estate. I also make funny videos. Check out my YouTube shorts for that. Today, we will be diving into one of the most confusing factors often neglected when buying a home. Closing costs. What the heck are they? Welcome to the ultimate guide on real estate closing costs, where we unravel the mysteries of these fees faster than a knife fight in a phone booth. But no need for violence here, folks. We're pulling out some valuable insights to save you money and time. Let's dive in. First, we need to answer the question, what are closing costs? Picture this. You've just found your dream home and you're ready to make it yours. You've been saving money for months or even maybe years to cover the down payment that everyone talks about. You've seen all the videos, all the ads about low down payment mortgages, and you're excited. You've finally done it and you're ready to make that next step. But wait, there's a plot twist. Here comes an array of fees lurking in the shadows and you have no way to stop them. These are your closing costs. Closing costs are a collection of fees required to set up and finalize your mortgage and real estate purchase. They're like the uninvited guest at your home-warming party that just won't leave you alone, and includes fees like appraisal fees, title, taxes, and much more. These fees can be extensive and will vary state by state, property by property, and even day by day. With so much, it is unknown until you get under contract for your property. And you may be wondering, well, how much do I need to save to budget for closing costs? How much will I have to pay? Well, you're in luck, because I have the answers for you. So show me the money, or rather, show me 2 to 5% to be exact. Closing costs typically range from 2% to 5% of the loan amount. So, on a $300,000 home, you might be looking at $6,000 to $15,000 in total closing costs. Also, it's important to know that for those buying into a co-op or buying cash, you can expect that fee to be lower in that spectrum. But, like a chameleon, these costs can change. They vary based on factors like your loan type, location, and even the lender's mood of that day. Okay, maybe not the mood, but you get my point. Let's break it down. There's the loan origination fee, title fees, appraisal fees, recording fees, escrow funding fees, mortgage insurance fees, home insurance fees, interest fees, and so much more. We could do a whole video just naming them alone, like the poker rap. And while some of these fees can be negotiated, some cannot. But hey, let's dive into some examples. For starters, let's look at loan origination fees. These fees range from 0 to 1% of your loan amounts. And this fee is the lender's way to cover the cost of underwriting and processing your loan. They may include an application fee, underwriting fee, lender points, and more. This can be negotiated. Mortgage insurance fees are typical to government-backed securities or mortgages and have to be paid at closing if they are not rolled into the loan amount. For example, FHA loans require an upfront mortgage insurance premium, and the cost for that is 1.3% of the loan amount. USDA loans, on the other hand, have an upfront guarantee fee, and that cost is 1% of the loan amount. VA loans have a funding fee, which varies depending on down payment and your VA status. This cost can range between 1.25% to 3.3% of the loan amount. And lastly, title fees vary by state, but the rule of thumb here is that you should budget around 0.5% to 1% of the total purchase price for this cost. Think of this as you paying for peace of mind that your new home is legally yours. By the way, let me know in the comments if you want a line-by-line itemized breakdown covering all closing costs, and I will give you access to my free PDF guide. Moving on, the question remains, what can we do to negotiate these costs? Well, it's all about strategy, because not all costs are set in stone and each one comes with its own set of levers that you can pull to adjust them. In some cases, you can negotiate or shop around for lower fees, either by looking around for a cheaper title company as one example, or perhaps interviewing different lenders and analyzing their cost structure. At other times, you'll be able to have some of these fees rolled into your mortgage loan, like the mortgage insurance that we talked about earlier. This will reduce in a lesser upfront cost to you, lowering your closing costs, but will increase your long-term interest payments on the back end. This is not a bad thing per se. I've done this myself for a few buys, as it was the right approach for my situation, and it may be the same for yours. If the fees you are looking to lower cannot be negotiated, let's say like property taxes, you can instead negotiate what is called a seller's concession, in which situation you have the seller pay for the fees. However, do note that lenders place limits on how much a seller's concession can contribute towards the buyer's closing costs, and this depends on the type of loan. Here are some numbers for you to keep in mind. For conventional loans, if the buyer will live in the home, they can negotiate up to 3% of the sales price of the home's appraised value, whichever is less, if the buyer's down payment is less than 10%. Up to 6% if the down payment is between 10% to 25%. They can negotiate up to 9% if the down payment is 25% or more. If the home is an investment property, the limit is only 2% regardless of down payment. For FHA and USDA loans, the limit is 6% of the sales price. And for VA loans, the limit is up to 4% of the loan amount. Remember, everything in real estate is negotiable, so channel your inner negotiator and see if you can lower those closing costs. Keep these tips handy. Compare lenders, negotiate fees, ask for loyalty discounts, consider concessions, and one last pro tip, close at the end of the month. This can reduce the amount of prepaid interest you'll need to cough up. And that's a wrap, folks. If you enjoyed this video or found value in the content, be sure to hit the like button and subscribe to my channel for more real estate insights and valuable knowledge to make your home dreams a reality. Got any questions? Let me know in the comments and I'll catch you next time.